My name is Jan Fahs. I'm from the Manchester Church of the Brethren in the South Central Indiana District. I'm a former professor of accounting at what is now Manchester University. It was still Manchester College when I was there. And about 3 years ago, we started doing some church finance sessions. So this is the third of those sessions. And we'll get started. You can tell probably already that I like to keep it informal. I have a hard time standing behind a podium. I need to move. Interaction is good. We have more seats too if we need them, Patrice. So we'll be happy to have anybody come who is willing. So let's just jump right in. This insight session, the ones that I've been doing were originally developed 3 years ago for church treasurers. And in year one, and those other stewardship, pastors are interested, of course, anybody who has an interest in church finances. It would be appropriate for any member of any congregation. In year one in Grand Rapids, Jan Bratton and I primarily concentrated on internal controls and accounting systems, working on a chart of accounts and that kind of thing. In year two, when we were in St. Louis, we talked about some policies, contribution acceptance policies, gift acceptance policies, and document retention policies. And we also spent a fair amount of time talking about church software, management software, and financial software for the church. This year, we're talking about the church as a small business. And there are several things that we could talk about. Some of them we have in past sessions. What I'm going to concentrate on today is keeping your tax-exempt status, making sure you have it and keeping it. We'll review revenues and expenses in terms of IRS proclamations on revenues and expenses for churches. Payroll will be this evening. See, I had a plug for you, Deb. Borrowing and investing, we're not going to have time to cover. Maybe a future session we could do something along those lines. We will work on planning and budgeting a bit this afternoon. Internal controls we pretty well covered earlier. We will work on financial reporting. What kind of reports do you give to your congregation, to your administrative team, etc. And if we have a chance, we'll talk a little bit about church software. It's good to know who you are so we can tailor our comments a little bit more toward your needs. You probably already know that this is an informal setting, and please feel free to ask questions, make comments whenever it's appropriate, okay? So let's start out with tax-exempt status. The IRS is wonderful with free publications you can download. This one in particular should be in every church, okay? Very easy to read, believe it or not. Tax guide for churches and religious organizations. It gives you an idea of what kinds of things you need to be looking for. So you should have that on hand. Now,
1828.
I don't, is it 1828? Okay, 1828, sorry. Okay, good. And there is a whole section on employment, and I'm not covering that section. There's a short summary of this document, my short summary of this document. If there's some activity you're doing in your church and you wonder whether it's appropriate or not, whether the IRS would think it was appropriate or not, go check it out. Okay, if it smells fishy, it's something you need to check out. But this document says churches qualify for exemption from federal income tax under IRC Section 501c3 and are generally eligible to receive tax-deductible contributions. Two things here. Churches do not pay federal income tax, and they are a vehicle that allows the donors to deduct their contributions. So those two things are what make us special as churches, and those two things we want to protect so that we do not pay income tax and so that our donors can get a tax deduction for their contributions. There is an automatic exemption for churches. In other words, you do not have to apply to be tax exempt. There's an automatic exemption. Your church, you're automatically exempt. However, the IRS does maintain a database of charitable organizations. And if you Google, I had a link here. I forgot we don't have internet in here. I had a link that I could show you where you go to check on charitable organizations. And I was going to show you that, yes, Church of the Brethren is listed in that database with a group exemption, which means the the denominational Church of the Brethren holds the tax exemption for our church. And then if you need to prove that you are tax exempt, all you have to do is reference that tax exemption and then pull out your church directory and show that your congregation is listed in there, and you've proven your exempt status. And I think if you don't have access to the actual document for the exemption, I've emailed, and I don't know this person, I don't know all these people at Elgin, but I emailed Ed Wolf and he sent it to me. So if you know Ed or can get his email, you can email him for the document. So we can show that we are tax exempt. We are listed in the directory so that anybody who's making contributions and wants to make sure they can deduct those contributions can then go ahead and do that. We're listed with all the other charitable organizations. Now we want to maintain that. Let's talk about what jeopardizes a tax exempt status. Inurement means activities beneficial or advantageous to a group of people. Here, inurement to insiders would jeopardize our tax exempt status. And this makes sense. What if your church has a big reserve at the end of the year and you decide to pay dividends to the board of trustees? Does it smell fishy? Okay, go check it out. Unreasonable compensation. You hired a new pastor. It took $430,000 to get him there a year. Yeah, that's a problem, okay? Or transfer of property at less than fair value. The pastor has a young family, 6 kids, really would like to build their own home, so we transfer land that we have to the pastor for $1. That creates a problem in our tax exemption. The prohibition for these things is absolute. You do it and you failed the tax exempt. So these things you do not do at all. The private benefit to insiders or others is not absolute, but this is where you have activities that serve an individual or an organization. For example, I've got several kids that are getting to be college age. So I think I might start a church and apply for, a church is automatically tax exempt, and then all the offerings I'll use for tuition for my children. If it smells bad, okay? There are cases that are not so clear, but if you have an inkling that something may not quite be right, check it out, and an attorney can help you with that. Substantial lobbying or political campaign activity can jeopardize your tax exempt status. I heard of a church who had a member of the church who was running for local office, and the church decided to support the campaign. Well, yeah, we support you, but as a church, we can't do that. Another area that's a little fuzzier is the unrelated business income tax. And we're going to spend a little bit more time talking about that. When we're talking about unrelated business income tax, you have unrelated business if you have an ongoing activity that constitutes a trade or a business, and that it's not substantially connected to the purpose of your organization. How do you know what the purpose of your organization is? Constitution, bylaws, legally, articles of incorporation. In most states, when you file your articles of incorporation, you're required to state the purpose of the corporation you're forming. Check those. You want that purpose to be as broad as possible, even to the point of serving the community. We have a nursery school, a preschool that we run in our church, and it never makes any money, but still I thought I should check to see if this is unrelated business income. We collect tuition, we run a nursery school on a regular basis. There are private nursery schools in the area. How is ours different? Well, in our articles of corporation, it says one of our goals is to serve the community, and this serves the community. We offer scholarships to students. So check your articles of incorporation to see what your purpose is. Now, if you have something like, well, let's go through the bottom ones. Advertising can create a problem. If you have a newsletter or a directory that you send out and you solicit advertising from local businesses and accept payment for that, that could be unrelated business income requiring filing of a Form 990. Gaming, you all have a lot of gaming going on, right, in your churches? Bingo, anybody have bingo? I don't know, the bingo gods must have gotten to the IRS because bingo's okay, as long as it's traditional bingo, and there are no other private bingo games in the same community, and it's not against state or local law. So if you want to do any gaming, you can do bingo. The sale of merchandise and publications. Now this is the church's own sale of merchandise and publications. You have t-shirts made up and little koozies and everything, and you're selling those. That would be unrelated business income. Rental income, there's a hitch here. You may rent property that you own for purposes for other people, unless that property has debt on it. For example, you have a parsonage that you've had forever, and you can rent that to somebody, and that's fine, unless you carry debt on that property. Think of it this way. If we were allowed to call it regular church income if we had debt, why wouldn't all churches go out and buy up a whole bunch of property and rent it out and use all the proceeds for the church? I think that's the rationale behind that. So if there's no debt on the property, you can rent it out. And I think what you're doing more is renting out space in your church, and that's fine. Parking lots. Here's an interesting one. Urban church has a great big parking lot. It's busy on Sunday morning, maybe on Wednesday evening and Sunday evening. The rest of the week it's not busy. Anybody rent out their parking lots? If you rent it out to somebody else and you, the church, collects the income from that, collects the fees, then you've got unrelated business income. However, if you rent it out to a company who manages the rental of the parking lot spaces, then it's rental income and it's not unrelated. Assuming you don't have debt on your parking lot, okay?
So you can rent your parking lot to a company?
Yes, but not to individuals. Okay. You just got an idea, huh? As long as we're talking about the IRS, let's talk a little bit about, and we've covered this in previous sessions, but go over receipts, revenues, income. They're all the same thing, stuff we get, okay, money we get. If we're a 501c3, we can accept contributions. Donors can take a deduction on their taxes. The donor is responsible for maintaining records for those contributions. And the donor must acquire a receipt for any single contribution of $250 or more. The onus is on the donor. However, we don't want to be difficult to get along with. So make sure you're set up so that when you receive a contribution of $250 or more, a receipt automatically goes out to the donor. Most of us have contribution software that we tally it all, and that receipt goes out at the end of the year. That's fine. What you're going to be wanting to watch for are those people who don't have envelopes, so that you can't track them very easily. Yeah, or a visitor who puts something in. $250 or more. $250 or more. Mm-hmm. Yeah. Yes. Right back.
A way of wording the receipt that has to be accepted by the IRS?
Yes, and there is guidance in the publication that I just mentioned. The important thing is the amount of the receipt, whether there were any goods or services received by the donor for that. Give you an example. This isn't a church example, but I'll give you another example. Our junior achievement in town organizes a 5K. And they recruited our business. I have a business that they recruited to advertise on the back of the shirt. And they said, if you advertise, you get 2 t-shirts and 2 free entries for the race. Well, I have 2 boys who run. So I said, okay. I made a $300 contribution, but it's not fully deductible. I have to take from that the price of the t-shirts and the entries. The remainder then is deductible. Another important thing, if you receive an in-kind contribution, some physical contribution, you need to receipt it also. However, you are not required to value it. It is not your responsibility to substantiate the value. All you do is say that you received it. It's up to the donor to have the appraisal and determine and defend the amount of their deduction. Okay, you don't have to be in that business. Do not put any amount on any in-kind contribution that you've received. Yes, sir. Oh, I'm sorry. I said I'd come back to you, and I didn't.
What if, say your youth sponsor takes the youth on a trip to a theme park. They don't want to be reimbursed for the expenses they pay for the youth, all that stuff. They just want some kind of receipt so that they can submit it for tax purposes.
Is that volunteer expense or not?
Pardon me?
Yeah, that's tricky. I would check with the particular details of that situation. One of the things we get into, why do they want, is it the mileage or the time?
Or the money?
Or money.
Mileage, cost of food, lodging, theme park expense.
Okay, let me suggest a better alternative. Go ahead, turn in the receipts, get reimbursed for it, and sign the check over to the church. It's very clear then.
Okay.
It's very clear. Use the accountable. Are you going to cover the accountable?
You betcha.
Okay.
Unless you do.
Well, I'll start it and you can finish it.
Okay. Because it's really, really
Because it
important.
is important.
Yeah.
Talking about expenses. First thing for me is you need to, when you're writing checks, you need to have proper authorization. Okay? Proper authorization from the person responsible for that particular line in the budget that you're writing from, or that particular fund. And Deb's going to talk more about expense reimbursement. This is what we're talking about a little bit here. According to IRS Publication 463, there are accountable and non-accountable plans. Accountable plans provide reimbursement that is not included in the employee's W-2, not included as income to the employee. A non-accountable plan, here's $100, cover your expenses, needs to go on the W-2 as part of their income. Okay? So if you use an accountable plan, turn in all the receipts for gas, the employee gets reimbursed, it's not part of their income, and the employee can turn around and contribute that check to the church and take a deduction for it, except for their part of the, excuse me?
This guy's not an employee, is he?
No.
Okay, that's fine.
Yeah.
Yeah.
Our church cuts us a check for annual conference, cuts me a check for annual conference, and I pay all my expenses out of that. Is that considered income?
It is unless you write down all the expenses, total them up within a timely period of time, submit that with any leftover funds you might have. Then it is not income. And be careful, you need to document the time, the place, and the purpose of the expense for each meal, for mileage, for lodging, especially for mileage. I'm going to stop here and let Deb go on this evening. No, I'm not going to stop here.
How specific is time? I mean, is date, or, I mean, do you need 12:04?
Okay, let's put it this way. If you get questioned about whether that is income to you or whether it is an accountable plan reimbursement, you need to explain it to the IRS. So you decide how, okay? It's not up to the church, it's up to the person who requested the reimbursement.
Any receipt that you keep should, with a timestamp.
Sure, receipts with timestamps are great.
About mileage reimbursement for like pastoral visits, that type of thing?
You need, keep a log. Keep a log, the date,
Would that be included on their W-2 for reimbursement though?
not if you keep a log.
Okay.
Yeah, keep the log. I know it's difficult. I know it is, but it is important. I heard of a gentleman who was being audited, and he did not have a log. So he went out quick and wrote down a bunch of numbers. He was being audited for 2008 or something. The auditor came and looked at his log, turned it over and looked at the back. The notebook was published in 2012. Okay? Be careful. I want to go on to budgeting because this is a tough spot, I think. How many of you enjoy the budgeting process? Couple. We're going to talk about two kinds of budgeting, and then we're going to talk about some advantages and disadvantages to both. Incremental budgeting is what I would, let me back up. How many of you have budgets, annual budgets? Okay, anybody not have a budget, an annual budget? Okay. I've run across a couple of churches recently who don't. Incremental budgeting is what we usually do. The treasurer prints off a list of the budget for 2013, and each commission, committee, team, work group, program group gets together and says we need more in this line and don't need as much in this line, and that's what we usually do, is incremental budgeting. It's not too hard. The problem is it doesn't really give us a chance to review what we're doing. We don't really take the time to say, yeah, we may want to look at this more closely. It's easy. It's what most churches do, but I'd like to propose something different. I'd like to propose program budgeting. How many of you have in your budget programs that, Judy started 20 years ago when she was interested in jail ministry, okay? Now, Judy's moved on, and we still have this line for jail ministry, and it's sort of limping along, and nobody's really been interested, but somebody might be someday, so we keep it in there. It may be time to retire that particular program and move on to something that suits the congregation of today. So program budgeting starts with evaluating the program. Each team, each commission, committee, whatever you use, gets together and looks at the activities that they would like to accomplish in the next year. And some of them that they have line items for, they may not do at all. It would be appropriate then to cut that out of the budget and use the resources for activities that the committee is excited about. They put together their plans, set their goals, determine how much is going to be needed, and present that then as that committee's budget for the next year. Couple of advantages. The administrative team or church board or executive board, I don't know what you have, then hears from the team about what they're planning to do for the next year and what their goals are. Remember, we've moved away here a little bit from the money and more toward the activities of the church. That's one of the things that's hard for some treasurers. Okay, we like the numbers. The reports are beautiful, but they're just a tool. The work of the church is what it's about. And this allows us to move away from, up 10%, down 10% to the work of the church. It also helps us at the end of the year or preparing the next budget to see how we've done. It's a time for evaluation, you know. Okay, education team, you were going to have Vacation Bible School and you asked for $2,000. You wanted to have 200 kids here. You only spent $1,500. Great. You did a great job holding the line. Did they? Not if they only had, if they only had 20 kids, they did not do a great job. And at the end of the year or the budget cycle, we say, okay, education, how'd you do? How was Vacation Bible School? Did it work for you? And it gives us a chance to do some of that evaluation. The numbers are the trigger, but the numbers don't tell the whole story. And it gives us a chance to take a look at the programs that we've done in the church and see if they're successful. If not, there we go. That gives us a way to change the program for the next year, set new goals, new cost for it, so that we have the focus on programs and achievements in the church instead of on increments. Yeah, takes a lot more time up front. Get each of your committees or commissions to go through their programs and say, these are the ones, these are our goals, and this is what we need. But it keeps things a lot clearer, a lot clearer. And this kind of budgeting has several advantages. When you plan very carefully, you plan ahead very carefully, and involve as many parties as you can and get people on board, it minimizes the emotion-charged discussions, the conflicts, because everybody agrees getting everybody to agree ahead of time. Most of the people agree ahead of time. And it helps eliminate some of those conflicts and those discussions you'd rather not have. The fewer discussions like that we have, the more confidence the congregation has in its financial team and its leadership, and they're more willing to put their money into programs that are working. So yes, it takes a lot more ahead of time, but in the long run, I think it promotes better understanding it, better transparency, one of my favorite words. In too many churches, we lack transparency. Well, we'll get to this in just a minute. Transparency doesn't mean that everybody in the congregation knows every detail of the finances. Transparency means that they understand the finances, which leads me to our next topic, financial reporting. How many of you have reports to the congregation at council time or once a year? Okay. How many pages is that report? 2? Good. 1? 3? 8? Okay. 2 or 3? 12? Okay. One page. One of the things that we want to do with our financial reporting is that we'll summarize financial information for various different groups. For example, for the congregation, the most summarized information is the best. If you can get it to 1 page, that is great. That is wonderful. Now, will 1 page work for your church board or administrative team? No? Will 1 page work for the chairs of all those committees who put their program budgets together? Now they don't have any information about it? No. So we have different levels of summary. Different groups get different levels of information. We also should have the information available by responsibility. Whoever is in charge of a program, for example, your worship team, your education team, each of those people supposedly built a budget. We need to be able to give them timely data on what has been spent, what's left in each line, okay? And they should be the ones signing off on each of those expenditures. Nobody spends out of their budget but them, okay? That's a good way to undermine your volunteers you have. It's hard enough to get them. Don't undermine them.
Now, should each team receive copies of the other team's budgets as well?
What do you think?
Speaking from a trustee standpoint, yes, because actions of the worship team, for instance, to decide to hold Bible study 5 nights a week would impact responsibilities that I have as a trustee, and expenses, those expenses would impact my budget, and vice versa.
What I would say would be, well, it depends on how you're structured. Do you have team representation on your administrative board or your executive board or church board? That's the level where you could give all the details, so that the chair of each of those teams then has the information. Everybody on that team may not need it, but the chair needs to know what's going on in the other areas. To the very first page, and have everybody look at the first page that is signed by Conrad Confusion. And pass that around so everybody can have a look. By the way, these samples come from another very good help. Yeah, Essential. Have you been to any of their presentations? Vana presents in Indiana. She does a great job. Essential Guide to Church Finances. It's available for about $15. And this is where these sample statements have come from. Essential Guide to Church Finances. Okay. So everybody. I'm sorry? Is that the 1828? I don't believe so. No. This is not an IRS publication. Yeah. This is a separate one. We have 2 different ones that we've. No, because it's not from the IRS. This is, hold on. I've got it on the slide. There we go. There's the copyright information. So we've got 2 separate ones. We have the one from Christianity Today, and then the one from the IRS are the 2 that I've used. Okay. So Conrad Confusion. What do you think? Okay, let's talk to the accountants first. Have you looked at it? Have you looked at Conrad Confusion? What do you think? Have you seen it?
I'm not an accountant, I'm an EA. I know.
Picky. Anybody understand it? Do you? It's confusing. Yeah. Yeah, even for it, I'd have to sit down and really dig through to figure out what they're trying to do with this. Can you imagine giving it to your congregation? No wonder they're confused. Okay? So turn the page, turn to the next one, and pass that around so everybody can take a glance. We're on the one that sort of fills half a page now. What do you think? Have you seen? Isn't that enough for the congregation, for the membership? Not for me. Not for you? No. The unrestricted revenues, the expenses against that, the restricted revenues, the disbursements of the restrictions, cash beginning, end, and then a breakdown on cash. How much is restricted, how much is needed to pay the bills that are upcoming, how much is available. What you're talking about is exception reporting and interpretive reporting. You need to know that we're over on maintenance because the piano needed a $4,000 repair. That's exception reporting. Things we didn't expect that you point out. Interpretive also is our contributions are down. It may be because in this quarter or this month we had 4 Sundays. Last month we had five Sundays. So there's interpreting the results. And those are 2 very important roles for the treasurer and the finance committees to do the I call it education too. You have to educate, especially educating the stewardship commission or committee and the board, the executive board. The treasurer needs to, each meeting, educate further so that finally we understand what restricted and unrestricted revenues are and how they can be spent. I've said this before, pick somebody, when you're presenting information, pick somebody who you know doesn't really understand finance. For me, it's Pastor Karen. Don't put that on. That's okay. She knows it. She's our associate pastor.
Readily admit that.
She admits it very readily, and we work really well together because she knows I don't get the prayer thing sometimes. So while I'm presenting, whether at board meeting or in the congregation, I keep my eyes on Pastor Karen. And if she's following, then I know it's okay. If she starts to glaze over, I back up and work it again until I can see that people are understanding. Your job is to educate, and pastors go right along with this. Your job is to educate. The next report that's in the packet is really a 3-page report. I want you to look just at the top half of the page first. It says summary page. Okay, just look at the top half of the page. I can pass this one around so you all can see some too. This is a report. Remember, we talked about summarizing at different levels. This report is not summarized much at all except in this first part. The summary is presented, and then after that, the report for management is presented. And this is the kind of report I would use for the executive board, where all the chairs are there from all your teams and committees. They can see it all. They can talk about what's different, what other commissions need to know. This is where I would use this report. And you can go ahead and look then through the other pages there of the administrative program, the ministry program, etc.
I have a question.
Yes?
That is pretty much what we give our congregation at council meetings too.
I do too.
Okay.
Well, here's another thing. They've always gotten that.
Yes, they have.
They've always gotten it. And if you make a change, then it makes it. So ours actually, they have always gotten, before I became treasurer, they'd always gotten 9 or 10 pages. I've got it down to 6. Okay? And now I've got it down to 5 with a cover sheet that is really the summary report, the 1-page report. Okay, eventually, another 12 or 14 years, I expect to pull off the last 5 pages and hand out just the summary report. But it'll take that long. People like what they're used to. And you know what? it's okay. It's okay, but just look. They know what each one of them is looking for one particular line, funeral dinners. How much have we spent? Okay? And it's okay. I mean, yeah, we can make little changes, but yeah, no abrupt changes, please. Yeah, that doesn't work. That doesn't work in hardly anything.
You know, is this book for sale?
Yes.
Brethren Press?
Oh, not Brethren Press. Go online, Amazon or something. No, actually, you could get it at Christianity Today. I think that's where I Googled it. Anybody from Indiana? I don't think anybody, yeah. The Center for, we're fortunate in Indiana. We have a Center for Congregations sponsored by the Lilly Foundation that puts on seminars for churches in Indiana. And they do a wonderful church finance seminar, $30. I mean, and a wonderful lunch. The lunch alone is worth $30. The last 3 pages of this report is the kind of information that you would prepare for others, for your bank. If you're trying to get a loan, this is what they want to see, would be these last 3 pages of balance sheet, income statement, statement of cash flows, okay? And that's a little bit of that's more of an accounting setup for external reporting.